failure of the White House and Republicans in order to reach an agreement could have implications, right? Let's get some perspective. I'm joined now by Christian Thwaites. He is the president and chief executive of Sentinel Investments. He's got about $23 billion under management, a lot of responsibility there. Also with us, Ernest Istook. He is the former Republican member of Congress from Oklahoma, currently a distinguished fellow at the Heritage Foundation. Gentlemen, good to have you with us. Ernest Istook, can you just explain, you've written that this is not really about a government shutdown. You say this is a slowdown. Explain what you mean.
Sure. It's because there will be more government workers on the job than on a typical federal holiday. Only about a fourth of the federal workforce will actually be furloughed because the military is going to be on the job. You can still fly air traffic controllers, transportation security, federal law enforcement, Social Security checks will go out, VA hospitals will be open. So most federal workers will still be on the job. Obviously, a significant number will not be, but most will, so it's more proper to call it a slowdown. Now, it doesn't mean that everybody will get paid on time, but everybody who works is going to get paid.
All right, Christian, so you heard what Ernest Istook is saying about the situation in Washington and the implications for government workers. So are we all making way too much of this, or is this going to, in a sense, backfire?
I think it is testing the patience of the market, and the market is dealing with some pretty strong macro headwinds. We've had QE2 and whether that's how that's going to be reinitiated. We've had some hawkish comments from the Fed. We've had
about inflation, particularly,
yes,
right?
And we've had two major rate hikes in the last week. ECB yesterday, of course, in China, and of course oil, as you mentioned earlier, sort of spiking through 111. So this sort of government impasse now is although it hasn't been taken terribly seriously by the market, I think if it goes on for too much longer, it could be very serious. We start to see an unwind in the markets, which are really pretty fragile and looking for a reason to sell off. And this could give it to them if it's prolonged for too much longer.
Ernest Istook, is that a challenge to lawmakers in Washington to craft some kind of a deal?
I don't think this is going to generate any sort of stock market collapse. And, we're not going to have a crash there, just like the world is not going to end because of these events with furloughs, massive furloughs, of course, in Washington, D.C. There is, I think, an over-anxiety that happens here in the Beltway because Washington, D.C. is so totally dependent upon the federal government with the contracts it throws off, as well as the lobbying that goes on. And believe me, lobbying will still continue during this time, and the federal workforce. So, for John Q. Public out in most of America, it's not going to be the same. I realize the markets never like uncertainty, but it's not as though the world is going to end.
All right. Well, Christian, if the world isn't going to end, what is it going to do to borrowing costs if indeed they don't get a settlement?
Well, this is the problem because the other half of this is if the debt ceiling isn't renewed, and that again could be quite serious. There is 6 to 8 weeks before the Treasury sort of technically goes into default, but I don't think anyone wants to see that played out too much. So we're likely to see the rates back up quite a bit over the next 48 hours.
All right. Ernest Istook, can you explain a little bit about the logistics in Washington? Why has it come to a point 6 months into the fiscal year that we're still laboring over this budget? Why has it come down to almost like a tripwire this Friday night?
We have a very polarized environment in Washington. We've seen that in the elections, and people recognize that right now they have to make a decision. Are they on the side of the big spenders, or are they on the side of the people who want to cut spending? This is a very different circumstance from 1995, when the annual federal deficit was only about 1/10 of what it is right now, and the accumulated national debt was only about 1/3 of what it is right now, and the public was not riled up. So both sides in this battle have been trying to send messages to their base. And whether it's a left base or a right base, people do not want to be seen as caving into the other side early. So people have dug in their heels, and remember, all of this came about because last year, when the Democrats controlled the entirety of the process, the House, the Senate, and the White House, they did not pass a single appropriations bill. So we have all these pent-up circumstances that are coming to a head right now, And like you said, it's maybe it'll strike midnight. I just kind of wonder, the way they're looking at this countdown clock, are we going to have Dick Clark come out at midnight and this crystal ball is going to drop in Times Square? It's
possible, but I don't think there's going to be a lot of confetti. Let me just push a little bit. I mean, because you describe this idea as both parties looking to their bases and not wanting to seem as if they've given up anything. Is it possible, though, that the representatives in Congress really reflect the contention in the country that people want cuts, but they don't necessarily want the cuts to affect them? They want the cuts to affect someone else. And this is really the sticking point, is that everyone agrees we need to figure out ways to match spending with the revenue, but no one wants it to affect their own pocketbook.
Well, you make a very good point, and this is because of the process that I call the political enabling that's been going on for years, with people in high positions and political positions telling the public it's okay to be demanding that government does more for you and you do less for yourself. So people have been taught that it's okay to expect government to give you things rather than you're having to work them. And those chickens are coming home to roost. So the political enablers are finding that they've run out of their ability to make believable promises because the level of spending we have is so unsustainable. We are teetering on the edge of that fiscal cliff, and we already have 1 foot over and we're leaning forward. This is bad stuff. And the problem is we have too many people that have been preaching irresponsibility for too long, and Americans have been told that it's responsible to want the cuts to be someplace else and not affect you. But we saw in the elections that trend line has been shifting, and now 57% of the American people say, look, if it takes a shutdown to start reducing spending, that's fine. And people are beginning to understand that there is not going to be any way to get out of this mess that doesn't require some sacrifice by a lot of people.
Christian Thwaites, the concept of credibility, responsibility, and lawmakers. What are investors saying to you about this dilemma?
Well, I think the markets and investors are are apolitical on this. They're just kind of looking at what the sort of fiscal outcome will be, and I don't think it's going to make any difference to the indebtedness of the country. It's still going to be running a 9% GDP deficit after this, whether or not they come to an agreement on Monday or Tuesday or not. And I think people are rather fed up with it, and they're kind of. The markets, we think, are really looking for a sell-off, and I'm just concerned that if this goes on for too long and there is this impasse and there's nothing done about either the spending or the revenue side, we'll see quite a big correction.
We always look for reasons why commodity prices increase. Do you think that this is part of the mix as to why gold hit a record today?
I think the commodity is some talk about it as being QE2 monetary driven. I think it's more demand driven. Gold's rather sort of special. I think it's rolling into contango right now, and it's sort of
contango. That's where it's more expensive in the future, and it's less expensive right now.
Yes, and I think, and then silver's more of an industrial play, so I don't think it's necessarily heralding big inflation numbers. And I think the commodity spike, which you've seen in copper, is more demand driven. So we kind of see that as relatively benign as opposed to fast trading of money. But we're slightly an inflection point in the stock market. We're 10 days away from the heavy earnings season. I think that's where the catalysts need to come, and the comps are going to be more difficult, and that's where we see some headwinds sort of going into what is typically a weak time in the market.
And you're typically a cautious investor anyway. I mean, you take a look at what's the glass is half empty most of the time.
Well, I like to see dividends and cash in hand. I prefer companies that pay dividends and prefer companies that have a commitment to raise those dividends over time, and I think that's going to be very, very important. So that puts us heavier into staples and energy and some material stocks, which we think are.
And what about cash? Well. I mean, do you think that people ought to be holding any cash right now because of the potential drop in stocks?
I think it wouldn't hurt to have. We actually raised a little bit of cash over the last couple of weeks, and we're kind of looking for the right re-entry points. And I think there'll be no rush to get into the market between now and mid to end May.
Ernest Istook, last question for you. What's going to happen over the weekend? Will there be continued budget negotiations if the government shuts down at midnight tonight?
Oh, yes, the negotiations will go on. Congress is not going home for the weekend. And you notice they carefully scheduled the expiration of spending authority to happen at midnight on a Friday night, which means it doesn't have that much consequence until Monday when the work week resumes. In essence, they gave them a 2-day overtime window for negotiation.
A little, 48 hours perhaps to reach an agreement. Ernest Istook, thank you very much, coming to us from the Heritage Foundation. Christian Thwaites from Sentinel Investments, always a pleasure. Great to have your insight.